In this video, we're going to go through exercise 8.23 and use the gross profit method in order to estimate inventory and cost of goods sold. Company Limited, which follows ASPE, uses the gross profit method to estimate inventory for monthly reports. Information follows for the month of May. Now the instructions are: calculate the estimated inventory at May 31st, assuming that the gross profit is 25% of sales. So whenever I do this method, I always find it very easy to set up an income statement, and then I can work backwards in order to calculate the gross profit. So I'll start off with my sales, and my sales are $1.2 million. And then I'll subtract out my sales returns, sales purchases, or sales discounts and allowances. So in this case, my sales returns are $70,000. So now my net sales are just going to be the difference. So I can just subtract 1.2 million by 70,000. So that gives me 1130000 of net sales. Now we're going to calculate the cost of goods sold. So let's just remember that when we calculate this, we can look at our beginning inventory, then add in our purchases, add in our freight charges if we have to pay for them, subtract out our purchase discounts, and then also if there's purchase allowances as well, and then subtract our ending inventory. Then that will give us cost of goods sold. Okay, so let's just think. Add beginning inventory plus purchases plus freight in, subtract purchase discounts, and subtract ending inventory will give you your cost of goods sold. So let's just see which numbers they gave us here. Beginning inventory at May was $360,000. My purchases were $700,000, and my freight in was $50,000. My purchase discount, so that decreases the amount of inventory, was $12,000. And just looking to see if they gave me my ending inventory. I have to calculate that. So my problem is I don't have the answer, and I'll just highlight these, to these two amounts here. But what I can do is work backwards. So I know that net sales minus cost of goods sold equals my gross profit. Now they don't tell me my gross profit either, but they tell me my gross profit is 25% of sales. So now if I take 25% times by my net sales, that gives me my gross profit of $282,500. So now if I take my net sales minus my gross profit, that is going to give me my cost of goods sold. And now we can add what my ending inventory is. So I can take my cost of goods sold and then flip the sign on everything on the other side. And that gives me 250,500. So again, all I did is I took my cost of goods sold minus the inventory, minus the purchases, minus the freight, and added the purchase discount to give me my ending inventory. And then what I usually do is I'll add all of those up again, just to make sure that it equals the cost of goods sold number. And that's how you do the gross profit method.